Yes, it is.
It's better.
Yes. Welcome everyone who's just joining us. We're gonna wait for a few minutes for everyone. Hi, Peter. Hi, Michael. And hi, Sarah.
Morning.
We'll just let everyone join and then. Good morning, Lachlan. Good to see you. Hi, Stephen. Lots of familiar faces this morning. And we got your first question. So I can see that the topic, Jess, be ready. It's gonna have a lot of interaction, I think, for this session. All right. I can already see the chat. We'll just give it a few more minutes. Hi, Adrian. Welcome, welcome. We'll give it a few more minutes. All right, so we're probably gonna have some people joining in as we start slowly. If you agree, shall we just start on time? I think everyone made it on time, so let's.
Right.
I think we should start. So thank you for joining us today, Jessica. So you are one of the partners at RSM.
Yes, that's right.
You are a tax services, so partners in the tax services division of RSM. So do you want to tell us a bit more about RSM and what their sweet spot is, and then a little bit about you, your background?
Yes, absolutely. Thanks, Christelle, and thanks for having me. I think it's the first session of the year, isn't it?
Yes.
So RSM is 99 years old this year, 100 years anniversary next year. RSM started in Western Australia 100 years ago, and we've actually now got 30 offices nationally. So as you can sort of assume from that, a lot of those offices are in the regions, but then we obviously cover all the major cities as well. Yeah, that's right. Yeah.
Yes.
So we're a national partnership, so our presence is across the whole country. I'm a partner in the tax services division, as you mentioned. I moved to RSM 5 years ago from a big 4 firm, just because I enjoyed working with SMEs and startups and wanted to sort of focus on R&D in that space. I still look after lots of large businesses, but yeah, there's certainly more of a focus in the mid-tier on the smaller businesses. And so yeah, my specialism is R&D tax services, but as an accounting firm, we offer all disciplines across business advisory, tax, corporate finance, etc.
Yeah. So one of the reasons you're here today for our first Exportia Lab is because you deal with a lot of small and medium-sized businesses, and that's exactly what our exporters fit in. So that's why you're here today. So thanks for being here. So today we're going to talk about the 2020 federal budget and the changes it created in 2 spaces. The first one is EMDG, so the Export Market Development Grant, and the other one is R&D Tax Incentive. So from the question we've received, we have some questions from the audience from the both sides. So because the audience, they're all exporters or exporters to be, or we'll start with EMDG, and then Michael, I've seen your question. We will get onto it as well, at least to some of it, because this is a 30-minute high impact Exportia Lab. So for more technical detail, we will maybe Jess then can make a time with you to discuss.
Absolutely. If anything's not clear, of course.
Yeah.
Sure.
Okay. So can we start please with the EMDG and tell us, I assume that everybody is familiar with the Export Market Development Grant, which supports, it's a program by Austrade. It supports exporters, provide subsidies for export marketing costs, for export related expenses. So when did it change, and what main changes for exporters, basically? That's a very open question.
Absolutely. So actually the changes to EMDG were actually announced just before the federal budget in September last year. So which and I can run through what the proposed changes are. One thing I'd probably note at the beginning is the changes for the EMDG program haven't been formally implemented in terms of guidance as yet, but there's certainly some changes announced, and they're going to be effective from next year. So I can run through that and then give you a bit of an idea as to when we're going to hear more. So at the moment, as you probably know, once you spend over $5,000, you can access up to $150,000 grant per year, 50-50 on what you're spending on export.
Yes.
It's a reimbursement program, and it's going to move to an eligibility grants-based program from 1 July 2021.
So what does that mean? So what does that mean? Changing from a reimbursement scheme to a eligibility-based grant? What is it?
So you'll be able to apply in the year that you're doing the export work rather than after year end like it works now. So for next year, there'll be a bit of a transitional year whereby you'll be able to apply for your grant in the year rather than wait until financial year end, which is obviously better for cash flow purposes.
Okay.
Yep. You get a bit more certainty in terms of the funding. They've sort of had a multi-tier or multi-year grants stage process whereby you can, if you're new to exporting, you'll be able to access grants totaling up to $80,000 over 2 years. That's brand new to export. Okay. If you're going to expand presence, if you've got a market already overseas and you're already exporting, but you want to enter new markets, you'll be able to access grants up to $240,000 over 3 years. That one is. And if you can continue to expand into new markets, there'll be further grants which are up to $450,000 over 3 years. So the amounts are actually increasing, although I understand from recent consultation that for the full budgeting for the program isn't increasing. The size of the grants potentially is. Does that make sense?
Yep. And in terms of the eligibility criteria for the companies, has it changed?
No, they haven't. Yeah, no, it doesn't. It's still going to continue to support promotional activities. It will include training and development of marketing skills as eligible costs. So there isn't any new guidance on how the eligibility is going to change. Okay. But it was still. I know one of the questions was around whether it's going to support Australian-made products, and that's absolutely going to be the case. Although that's also a requirement under the current program.
Yes.
But as I said, it's looking to provide the R&D, the EMDG finance in a more timely manner to assist companies. Okay. So that's good news.
Yeah, and also in terms of the company's size. So I've heard that they changed that eligibility criteria in terms of turnover. So what does that look like to be eligible? Yeah. If I'm a small business, what turnover do I need to be doing to be eligible, basically?
Yeah, so unfortunately the eligibility threshold is for that. The turnover has been decreased from 50 million to 20 million, which is a little bit of a shame. That's kind of, that matches the R&D, I suppose, the turnover threshold in terms of the 2 levels of benefit associated with R&D. So maybe that's part of the reason they've done that. And obviously, as I mentioned, if they're going to provide higher levels of funding, that's maybe where they're getting the saving is by reducing that turnover.
Okay.
So that would certainly affect some businesses, I would presume.
Yeah, that are already above that, I
Yeah.
assume.
Yeah.
So also, they're mentioning a multi-year funding scheme. What does that look like in terms of? So there's an upfront funding, and then that you get, and then there's kind of a multi-year one. Is that correct?
Oh, that's just around the different levels of grant funding that I mentioned, depending on the position that a company's in, as to whether they're brand new and planning to export.
Okay.
Whether they're expanding their, it's those levels of stages of export rather than just a blanket export level. So looking at where you're at in your export process or export.
Oh, okay. All right.
Yeah, that's right.
Okay.
So that's obviously quite beneficial if you're obviously, for example, you're already in the UK but want to expand into new markets in Europe, for example. That would potentially allow you under the second stage to access up to $240,000 over 3 years.
Okay. Yeah. So Sanjay is saying it's not scattered for SMEs, right? Well, actually, it is up to, if I understand right, it is up to 20 million turnover, right? Instead of up to 50. Yeah. Okay.
I suppose Sanjay's probably saying, there's still SMEs in that 20 million to 50 million space, and now they're going to lose out, which is a fair point.
Yeah.
Maybe that's probably what Sanjay's alluding to.
Yeah. Okay. Any other changes that will be affecting the export market development grant that the community here today needs to know?
Not really. I think one thing is it's all of because it's supposed to be in play from next year, obviously from 1 July 2021. It will mean that companies can be claiming under the old program from 1 July 2021 through to 30 November, but also looking at the new program. It's quite a short window we're in February already, that there's a lot of talk around how these rules it's all going to happen pretty quickly. They're going to be, the rules are being tabled apparently in I'll answer that question in a second. Sorry. The rules are being tabled during the current sessions of Parliament. Obviously, they have 3 weeks now. Then they're going to look at it again in May, and then so obviously once that happens, there's a very short time space between the May sitting of Parliament and then the June year end. So it's probably going to happen all quite quickly, and then the guidance will come out, and so we'll have to get on top of that pretty quickly, and we'll obviously do some webinars then around the new rules once we've got the formal guidance. So that is a bit of a rush process, I suppose.
Okay, and Adrian is asking, do you know the minimum turnover that let's say a startup has to do to be eligible for EMDG? Is there a minimum?
I don't believe there's a minimum turnover, no.
Okay, all right. Okay, so you need to turn over and up to 20 million per year.
I thought I missed a question there, I think.
Yes, so basically, what's the minimum turnover amount for SME to qualify? So if I'm a startup and I generate 250K per year of turnover, do I qualify for EMDG or not?
Provided you meet the other eligibility criteria, yes. It's more around the maximum turnover threshold.
Okay, all right. Yeah. Are the other eligibility criteria, have they changed, or are they roughly the same?
No, they have. That's what they're going to provide in the guidance when they release that. But the applications will need to apparently include export market plans, details of eligibility, and a breakdown of the expenses. So that's what they're talking about. And as I said, that sort of export market plan would obviously provide a budget, and then that budget would be used to access the funding. Yeah.
We also have a bit of the two questions from the same type of problem or topic. So we have Lachlan and Stephen, and basically, so Lachlan is saying we're coming to the end of our current EMDG next year, and they're growing their export. So are there any options for them to renew or go back on the program? And
Yep. Oh, sorry. That's it.
Go ahead.
That's so obviously, as you know, there's currently an 8-year time frame to be able to claim for up to 8 years, and they don't have to be consecutive. They haven't mentioned yet whether this program will allow you to start that again, but that's certainly again something we can bring up in consultations. I think that Lachlan's asking is that they've had their 8 grants yet, and they might have squeezed the first and second year you can apply for together, which is probably where the Stephen's talking about the 7 years as well.
Yes. Does the 7 year time limit apply for getting the grant? So let's see Stephen's question.
Yeah, they haven't mentioned that as in the guidance as far as I'm aware as yet. So that would be an interesting area to look at as well, because I know some companies have had the,
Okay. Yeah. So does anyone else have any question for Jess around the new EMDG grant?
One thing to sort of mention there, Christelle, is just that, you know, for the first time, the idea of these changes is that, you know, exporters are going to have 100% certainty for what they're going to be reimbursed for before they spend the money, as opposed to it being retrospective, which, you know, can be really, which is great for planning purposes. And in the past, if the EMDG budget has been exhausted during the year, you know, some companies have found that their export market payments have been cut slightly. So this will prevent that from happening, which is good news.
Yeah. Hence the export market plan with some budgeting in the initial stages, I assume.
Yes.
Yep. Okay. All right. I just would like to check if anyone has any question left on the EMDG topic. Well, I guess we are going to move then to the next topic, which is R&D tax incentive.
Yep.
So can you take us so first of all, so what has been happening, you know, around the R&D landscape in the last few years? Can you just give us a bit of a brush up on that?
Yep,
and also
absolutely.
The effect of COVID as well, just to give us a bit of context, if you don't
Absolutely. Mind. Okay, yes. I mean, for anybody who's been claiming R&D, you've probably realised that in the past sort of 3-4 years, there was a lot of scrutiny on the programme, particularly in relation to software claims. Companies were undergoing retrospective reviews, and if their claim was denied, then there was repayments of R&D tax credits, which was pretty challenging for a lot of businesses. So I suppose from my perspective, in the last year, we've actually from 1 January last year, so even before COVID, we've started to see that landscape change a bit for the better. There was a small business ombudsman report by Kate Carnell out of Canberra that particularly looked into the effects of this sort of heavy-handed tactics, I suppose, of the authorities on SMEs, and made a suite of about 24 recommendations. That was at the end of 2019. Now, from 1 January last year, and partly due to that, and because of other, you know, negative press, as I mentioned, the Oz industry announced a user journey whereby they were going to look at claims. If they were going to review your claims, it would be a much more collaborative process with the claimant and Oz industry. It would be a traffic light system. They review every single application form now on lodgement and rate it sort of like a traffic light system: red, amber, green. So red, you know, there's risks associated with the claim as lodged. Amber, you know, claimant's trying to do the right thing but not quite getting there, and therefore we're going to provide more guidance and correspond with the claimant. And then green looks to be doing the right thing, you know, we'll issue a registration number. So as you all know, it's self-assessment. So that was sort of the start of 2020, and then, which was positive news. And then COVID hit, obviously, and things lots of things changed there. You know, supply chains from overseas were hit, and because of that, I suppose there was a lot of pressure to maintain R&D benefits for companies that were doing R&D and support the program. So we did find ourselves in October 2020 getting some positive news from the federal budget. So I can run through those changes quickly. So for the SME market, so under $20 million turnover, they have basically decoupled that 43.5% tax credit from the tax rate. Now, what that means is, at the moment, the 43.5%, the benefit a company gets depends on what their current tax rate is. And tax rates have been lowering over the last few years. So we're currently 26%. Last year was 27.5%, etc. So obviously the government became aware that the benefit was increasing. So wanted to sort of decouple that. So as of 1 July 2021, so like EMDG, the changes from 1 July 2021, it'll be an 18.5% tax credit above your tax rate. So basically, what that means in easy terms is it's a 25% tax rate next year. 18.5% above that takes you back to the 43.5% refund, actually. So the refundable amount remains the same if you're in a tax loss. If you're tax payable, it's actually an increased benefit. It's 18.5 cents versus the 17.5 cents we've had this year and 16 cents last year. So the government's being actually pretty generous towards SMEs, in my view. that's the change at that end of town, and they talked about capping refunds at $4 million, which was actually a pretty big cap anyway, $4 million refund, but they've actually removed that one, so there's no cap on refunds. The one, again, the only sort of losers in this is a bit similar, going back to EMDG, it's those companies in the 20 to 50 million turnover space where they might have been getting, you know, with a lower tax rate, have been getting an increased benefit on the 38.5% non-refundable tax credit. So we're seeing, again, without sort of going into the numbers, that has, if you're over 20 million as of next year, you get an 8.5% benefit decoupled from the tax rate on your first 2% intensity of R&D spend. So what that's saying is, if your R&D expenses are 2% of your total expenses, you get 8.5 cents in the dollar. However, if you go over 2% intensity, then you get 16.5 cents per dollar. So again, that's great for companies that are R&D intensive, you know, have always had a relatively big claim versus the size of their business. So that's positive news as well. Yeah. So the changes have been pretty positive. They've increased. There was always $100 million expenditure threshold in this current years, which is going to go up to $150 million, but that would really only affect the big end of town, you know, your Cochlears, ResMeds, those types of clients that are huge, you know, the biggest R&D names in Australia, I suppose. Yeah.
Okay. So I guess, Michael, has Jess responded to your question?
I saw Michael's question. I'll respond to that. I can talk to but it's quite complex. So you're absolutely right. In terms of the benefit I mentioned, you know, if a company's profitable, tax payable, the benefit is 17.5 cents in the dollar, the 43.5% currently R&D tax credit less than 26%. So for this current financial year to 2021, it's 17.5 cents per dollar. And then yes, if the marginal tax rate of shareholders, the profits are distributed, is affected by that as well. But I won't go into that without sort of talking to you personally, because there's quite a complex details around how it works in terms of profits being distributed, franking credits, and that sort of thing.
Yes.
Happy to talk to you afterwards, though. Absolutely.
Yeah. So we.
But yeah, you've certainly got the right idea that that's that 17.5 cents in the dollar, which is again not to be sniffed at in terms of R&D expenditure.
Yeah. Okay. Was there any other, you know, quite significant change?
Yeah, sorry, you're one of the anonymous attendees mentioned it, and I also meant to mention the other COVID. So obviously in March, due to COVID, the government announced new measures in terms of depreciating assets and the instant asset write-off and accelerated depreciation measures. They were extended further in the budget in October. So what that has been really beneficial for the R&D program, because we've confirmed with the ATO that applies to assets used in R&D. So
yes,
as an example, and again keeping it simple, if you've purchased an asset since COVID, it's basically that you're going to use an R&D, and under the tax measures it's entitled to an accelerated depreciation or your instant asset write-off, then to the extent that you use that asset in R&D, yes, you can claim that R&D benefit on it as well. So that's been really, that again, great news. If you've purchased a piece of machinery that you would have previously depreciated over 5 years, you're going to get a good benefit on that straight up front, which is fantastic. And we've got a flyer. I think you shared the flyer on that, Christella. I can send it to you. We've done a bit of an analysis on that, because it's again that involved talking to the ATO to confirm the position on that as well.
Yeah, I think if we can share that in the follow-up.
Sure.
In the follow-up email with the attendees, along with the contacts, and then they can also reach out to you. So if there's no other question around R&D for now, or did you want to add anything on R&D tax incentive for now, Jess? Or
the only thing to mention, as I said, is that it's being decoupled from the tax rate. It's generally an increased benefit for smaller profitable businesses. For over 20 million, it will be more beneficial if your R&D intensity is relatively high. The only other thing I probably didn't mention is there's going to be more transparency. So what they're going to do after 2 years of the end of the financial year, that the Commission is going to publish information about entities that are making claims. So there will be more transparency around who is making R&D claims. And I suppose some businesses might not be happy about that. But that's, again, part of making the programme more transparent and increasing the integrity of the programme amongst the claimants, just given the last few years.
That's really interesting. So we have a question from Lachlan around R&D again. So does R&D done by us overseas
is
covered if you do R&D overseas?
Yep, that's a good question.
Your own business R&D, but you have it done overseas.
Yeah, so generally you cannot claim R&D done overseas. It's a location-based test, so it's to reward R&D done in Australia to promote our Australian labour and the labour force. But the current program does allow a de minimis amount of R&D spend, so that's up to 2.5%. If you had a trip overseas and it's less than 2.5% of your overall claim, you can include that. There is a way. There is a way to get an overseas advanced finding where you can apply to AusIndustry to confirm whether your overseas R&D activities will be claimable. Yes. And just to summarize how that works, you must do it within the year that you're doing the R&D. So unlike the R&D process, which is retrospective after year end, you do have to apply within the year for an overseas advanced finding. It has to be less than the spend in Australia. So you can't be spending $1 million in the US and $100,000 here, because you would automatically be out. Yep. And you also have to prove that your R&D activities couldn't be done here. So whether, it might be that there's a research facility that exists in Russia that doesn't exist here, or in Europe. Yes. It might be that there's a professor that resides in Canada or the US that doesn't reside in this country. And then, so you have to detail how you could not do the work here, and it's linked to the Australian R&D activities. It's quite a long process. So I'd say, unless you're spending an awful lot of money over there and here, it's something you should, and because then your claim is also under scrutiny automatically by going through the advanced finding process. But we've been doing some recently and they're taking months. But certainly if you're spending a lot of money and you can prove that there's that you couldn't do the work here, then it's something worth it considering.
Okay. Yep. Thanks for the question, Lachlan. So if there's no R&D other question, we have a question for Sanjay saying, well, if there's no international travel, it would be difficult to lodge any claim. But are there, I can respond to that too, but because I've got examples, but what other categories of expenses are still claimable if you're still selling during COVID?
Yeah, so you might have an overseas representative that's based there and you're paying through your Australian company. That type of thing is claimable. Samples, promotional materials. I know that they did relax the rules around travel, I think, in terms of the current year, the last year, 30 June 2020, EMDG applications because of COVID. Yep. So they were conscious that obviously people couldn't travel.
Yes.
I didn't know if you had anything to add on that with your experience, Christelle.
So for us, because our expenses are claimable, so any marketing consultant you would hire to conduct a project for you, the overseas representative as well that you would have, you can also always claim. There's still digital congress going on, registration fees for international digital congress that you can claim. So there's a lot of categories under which you can claim some expenses as well, even though people are not traveling. There's a lot of things that can be done.
Yeah, absolutely.
Yes. Yeah. So that's.
And I guess the thing is, everyone's in the same boat. So.
Exactly. Yes. So, and then we have another question from Stuart around R&D lending.
Good question. Yes, there's some good questions this morning. Yes, so R&D lending. So we know we work with a few providers of R&D financing, third-party providers. It's not something we do, obviously, as an accounting firm. Yes. Typically, how they work is they lend against your R&D refund. So it's companies who are in tax losses, who are claiming R&D and getting the full 43.5% refund. Although some of them are moving towards providing other sorts of funding. So I wouldn't rule out the fact that if you are getting some sort of benefit, you can actually get some funding on that. And I can talk to you certainly about that separately. But no, I think the companies we work with, and there's two in particular who do it really efficiently. It's relatively easy. One has an online portal where you go in and you provide your details. We typically would work with our client to provide the relevant material and prepare an R&D expenditure calculation that we know they're going to get the refund on. And the financiers typically finance 80% of that. So, it's not just if you need cash flow, but if you've got to, enhance your balance sheet for a potential sale of the business or something like that, or you just need funds and you'd rather do it this way than go through the bank or whatever, it can be quite an easy way to finance. And also, the other thing it allows you to do is spend more money on R&D. So, if you spent $500,000 to 31 December just gone, and you claim 43.5% of that to 237,500, then you can obviously go in, claim 80% on that and spend that on R&D and go through the financing process again. So it's a bit of a cycle, if you know what I mean.
Yeah.
It's been good. I say the experiences we've had have been very positive.
Yeah.
And I say it's not just for when you're short on cash, it can certainly help for other means as well.
Yeah. Excellent. Thanks for the question. Stuart. Does anyone have another question for Jess before we wrap up? So I'm just going to display. So you'll receive, in the meantime, if you guys want to think about a question, what I'm going to do is I'm just going to display Jessica's contact details. You will receive her details in the follow-up email. So don't hesitate to reach out to her for more questions. So we have one more question from Stuart. Will the EMDG changes work? I'm not too sure.
Well, I hope so. I mean, I think anyone getting certainty on the funding they're going to get back is good. And obviously getting it in a more real-time fashion is also better. We had this discussion with the R&D program changes many years ago as to whether they would provide instalment payments as opposed to waiting for year end. But I think having spoken to some of my colleagues in this space, I know that they're a little bit concerned about the fact that we're waiting on the new rules to be tabled in Parliament and then consultation, etc. I think they're worried it might be passed through quite quickly, but we'll see how that goes, I guess.
Yes.
We certainly keep you updated.
Well, if they work with you, it might work.
Yeah, absolutely.
No. I mean, there's plenty of specialists that are doing that too, but of course we're if we're working with RSM for such a long time, we're very trusting that our customers will be well looked after.
Good.
Any other question? So some people are saying I will send you a LinkedIn, and so we might receive some LinkedIn connection from the session. Feel free to reach out.
That'd be great.
Yeah.
As I said, I will provide you with the details around the instant asset write-off. It's actually on my LinkedIn page as well. We published it a couple of weeks ago, but that would be lovely. Yeah, thank you. Yeah,
I think it's a good way to reach out to you. We'll send the details. So thanks for being with us, making the time, and to everyone for making the time too, and sharing your experience. I think it was a very hot topic today.
I know. There's some good questions, so thank you for that.
Just to let you know, we still have the final date to be confirmed. So our next session will be around establishing your supply chain in the Netherlands. So we're going to have an expert around this topic. So the next lab will be around mid-March. So we'll confirm the date to you, but basically be aware we're back on the Exportia Lab for 2021. So there'll be your 30-minute every month. Feel free to send me some topics if you'd like me to cover any specific issue you would like some responses on. And I wish you a very nice rest of the day. I'll see you very soon. Thanks for making the time.
Thank you.
Thank you. Thanks, Jess. See you soon.
Thanks. See you soon. Bye-bye.
Bye-bye.